Here's what's making news on Friday. Canada's trade surplus widens while the US posts a smaller deficit, and oil sets yet another record high. But first, some good news for the Canadian economy. Employment has risen by 19,000 jobs for March, with all of the gains in full-time employment. Despite the gain, unemployment ticked up a notch because more people decided to enter the workforce in the month. Adding to the smiles, rising oil prices have pushed the value of Canada's March trade surplus up 15% to the highest in 10 months. The higher oil prices have helped to keep money flowing into the country by offsetting falling manufacturing exports from the higher Canadian dollar. Also helping the surplus was a second month of decline in imports. The US has also released their trade figures, with the trade deficit shrinking almost 6%. Exports were down, but imports fell even sharper as Americans continued to tighten their purse strings. So while the reasons for the narrowing are not great, the result should see net exports make a larger contribution to economic growth than previously expected, which could help keep the US out of recession. In other news, the government has officially rejected Alia Tech Systems' bid for MDA satellite business, marking the first time the country has blocked a foreign takeover in about 23 years. And shares in ACE Aviation Holdings have fallen after the Air Canada parent reported a larger first quarter loss, despite a lift in sales. Looking at the markets, North American stock markets have begun lower, with financials dragging on the US market and ACE and some resource stocks bringing down the TSX. Like crude has set another record of above $126 a barrel, while gold was firmer at $884 an ounce in early trade. Meanwhile, the loonie was up 1% at 99.3 US cents. For more breaking news, stay linked to financialpost.com. I'm Alia McMullen.